Your time is 2 p.m. You are watching the Monday edition of Market View right here on Eswatini TV. I am Nathalie Sitole and welcome to the program. Today we want to drill into the rising cost of fuel and what it could mean for business and the economy. In the coming months, Eswatini's inflation rate currently stands at a low 2.0%, though businesses are already grappling with rising global oil prices, higher transport costs and uncertainty in international markets. Tensions in the Middle East have continued to expose how vulnerable import-dependent economies are to external shocks, a direct threat to profitability and business sustainability. Now, as business costs rise, the price of essential goods and services is likely to follow. If wages do not keep pace, consumers could see their purchasing power eroded, leading to reduced spending and further pressure on businesses that especially depend on domestic demand. In conversation with Business Eswatini's head of trade, Musa Masego, we ask, can businesses weather the storm? But first, our business news. In our business update, we begin with this. The Central Statistics Office has stated that it is expected that inflation will continue to increase next month as global tensions continue to rise. Bongmenzi Zwane, statistician at the Central Statistical Office, said this when speaking about the April inflation rate, which increased to 2% from 1.6% in March this year. During April, the inflation rate for goods was 2.6% and for services it was 1.1%. The statistician was unpacking the Consumer Price Index report for April this year, which has been recently released.
In terms of what we have observed from the report, so we have been seeing a downward trend from the inflation. As it last month, the month before, it was 1.6, but the main contributors was food, which contributed negatively, as we reported last month. That was one key takeaway from the decrease in the inflation rate. So, but now we have released another one for April 2026. So we have seen an upward trend. So from 1.6, it has increased to 2%. So I think we will recall that there was an increase in fuel prices. So that was one major contributor. We will recall that we have water, which also takes into account the increase in the month of April. So those are one of the key takeaways which have led to the increase in the inflation rate for the month of April. Fuel has increased again for the month of May. So we are, for the report for May, we are expecting also the category where there is fuel to increase. So we are expecting that increase to continue even this month for the part of fuel and lubricants. So that's one thing. Then going forward, I think one will analyze it maybe in one or two ways. One would be, will this increase now that that is been effected, trigger certain increases in the food basket, like the food that we normally buy in the shops? That is one. If it will have that immediate impact, then you'll like to see even a higher inflation rate.
The Ministry of Commerce, Industry and Trade has reported that rehabilitation and restoration works are currently underway following the fire that broke out at its headquarters last week, which caused extensive damage to offices, equipment and critical infrastructure. Preliminary reports indicated that the blaze, suspected to have been caused by an electrical fault, disrupted several government services and temporarily halted some ministry operations. In a statement, the ministry said government continues to work tirelessly to ensure that all affected areas are restored safely, swiftly, and efficiently. Technical assessments and recovery processes remain ongoing, with priority being given to safety, service continuity, and the well-being of staff members. The ministry further reported that employees are continuing to operate remotely to ensure that essential services remain accessible to eMaswati and the business community. Members of the public have been encouraged to continue engaging with the ministry through digital platforms, official communication channels, and designated contact points. The Ministry of Commerce, Industry and Trade also expressed sincere gratitude to government institutions, development partners, the business community, and members of the public for their patience, support, and understanding during this period. And you're up to date with some of the latest in business. After the break, we speak to Musa Masego from Business Eswatini. Stick around.
Hello to all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Welcome back, and moving on with the program. The Central Statistics Office has released the April Consumer Price Index report, revealing that inflation has risen to 2% last month, up from 1.6% recorded in March this year. The 0.33 percentage point increase comes at a time when businesses and consumers are already under pressure from rising fuel prices, higher water tariffs, and escalating housing costs. As the cost of living continues to climb, the business community is now faced with the challenge of maintaining operations while also protecting consumers from further price hikes. To unpack the implications of this growing inflation and what it means for the economy, we are now joined by Head of Trade at Business Eswatini, Musa Masego. Mr. Masego, good afternoon. Thank you very much for your time. So just understanding the disconnect, between headline inflation and the reality on the ground, are businesses actually able to operate right now?
Good afternoon, and thank you for having me. It's actually a very uncertain and interesting time. When you're looking at the current inflation rate, one wouldn't be too worried where it's sitting at the moment, which is obviously 2%, because it is still within the target range that was set by both our central bank and the South African Reserve Bank. What I think is, where the disconnect may seem to be now is obviously we're at the consumer end faced with actual reduction in disposable income. That coupled with the predicted increases going forward and the uncertainty that's caused by the global geopolitics makes it very difficult, for first of all, the businesses to be able to contain their costs, which, as a effect then also makes it very difficult for consumers to be able to manage their current expenses or even just forecast on what the expected cost would look like even 2 months 3 months down the line.
Yeah, businesses are already feeling the pressure. So have consumers been able to feel it, at least from the pump? When you look at it from a business perspective, how should the private sector, or how concerned are you as the private sector about the months ahead?
It is very concerning, if I'm honest. A large part of obviously the effects of inflation, what we're seeing, is caused by the conflict in the Middle East, specifically the US-Iran war. And as we've seen, the break in the supply chains is obviously then caused an increase in the global oil prices, which related to pump prices. But even if, for example, the war were to end tomorrow, businesses and indeed consumers must not expect things to then revert back to what they were pre-conflict levels. It does take quite a lot of time to manage and repair those broken supply chains. So with regard to what to expect, as the conflict in the Middle East persists, we are expecting quite a lot of uncertainties because obviously the situation changes on a day-to-day basis. What we can advise is what we're seeing now, treat that as the new normal. Therefore, let's look at ways in which we, as the businesses, obviously, can improve operational efficiencies. Let's see where we can cushion consumer costs to an extent that is obviously reasonable within the business sector. And I think the other thing is just also then be mindful that the disposable income of consumers is expected to decrease. Therefore, let us adjust our business operations accordingly.
This new normal is apparently filtering into the day-to-day expenses, and with tensions in Iran continuing to affect global markets, what impact are rising fuel costs already having on businesses locally?
Quite a lot. The problem, well, not the problem, but obviously, when you're looking at the impact of fuel prices within the economy, one wouldn't be able to pinpoint which particular sector is more affected than the other. Because as a country, we do import quite a lot from South Africa, and also in terms of trying to achieve our aspirations of being export-oriented economy, we also do export a lot, just obviously outside South Africa, the broader SADC region. Now, as then that permeates through to all sectors of the economy, and it makes it a bit more difficult for us to do business. And what we have seen so far is, businesses trying to find the right balance between cushioning the current impacts from the rise in fuel costs, because we are cognizant that as we continue to erode disposable income, then obviously that has a marked effect on customer retention. At the same time, we cannot continue to absorb such cost. So there are elements of then trying to balance between that and seeing how much we can pass on those additional costs to the consumers. Therefore, we have seen, in particular, the SME sector struggle quite a lot because they have less tools to be able to leverage, against whether you're looking at negotiations with suppliers, whether you're looking at bulk purchasing. Those elements, the SME sector in particular, don't have access to. So you would expect them to be suffering quite a lot more when you compare that to kind of like your larger businesses.
You've touched on SMEs suffering the impacts of this war and the rising inflation. And we know that they often operate with very limited cash flow and are more exposed to sudden cost increases. How would you advise that they cope, with the uncertainty around fuel prices and imported costs?
That one, I would say we should not look at the issue of perhaps, the rising fuel prices in isolation. We do need to take a broader view of where, what the direction of the economy is going and what measures from a micro perspective. So that means looking at your own operations and, like I was saying, seeing where you can leverage, additional operational efficiencies, but also then leverage on the broader macroeconomic policies to say when we're engaging with government, where can we find areas of relief? Because at the beginning, at the top of the interview, you mentioned issues around increase in water prices, increase in electricity tariffs. All of those, you don't want to have those conversations in isolation, but rather have a broad view of how do I manage these, increasing costs. For example, we are going into the winter months. We are expecting quite an increase in terms of electricity bills or energy bills. Now, if you're at the SME, you would start to look at a case of how can I shift my operations to such an extent that a lot of my energy demands are, structured at off-peak hours where the electricity tariffs are a little bit, or at least are less costly. Such operations, whether you're looking across, the energy issue or looking at the various options available for transportation, how can you find additional operational efficiencies within the sphere that you're operating in to try and cushion against the long-term effects of basically the increase in the cost of doing business?
Musa, in some of the graphics or visuals that we've had, I'm assuming that our viewers are taking note. According to the Central Statistics Office, service inflation will rise up to at least up to 1.1%, and goods inflation will go to as far as 2.6%. You highlighted on how, unfortunately, some of the costs will have to be transferred onto the consumer. Are businesses in a position to absorb higher fuel and transport costs, or unfortunately everything just might as well fall onto the consumer?
The truth of the matter is they are not in a position to absorb all these increasing costs, particularly that of transport. Because again, a lot of the times we are consumers as well. So that means you're looking at the logistics companies who a large part of their pricing structure is based on fuel prices. They would pass that on to the businesses. The businesses, again, you are dealing with the increase in transportation costs, but also the increase in the prices of the goods themselves. Therefore, both those elements, the businesses can't cushion. So that's why I'm saying we are expecting them to at least pass on those costs to the consumers. Perhaps not 100% of the cost. We are looking at ways in which we could cushion that particular impact. But as the situation continues to persist, it becomes then very difficult for us to maintain those particular cushions. So we are faced in, with the stark reality, if you're particularly looking at the retail sector, where less disposable income basically means less sales and less customers. So you would expect, as the situation continues, consumers tightening their own purses, that we are expecting to see a bit of depression or depressed performance from certain sectors which are largely consumer facing, as opposed to, for example, some of the manufacturing sectors where you have long-term contracts that, would take a bit of time to negotiate.
you've drawn me to the demand side risk of things, where higher living and transport costs tend to then reduce household disposable income and to some extent weaken local consumption. To what extent are businesses worried about reduced consumer spending power rather, if fuel prices do continue to climb?
So my answer to that is actually twofold, right? The truth is, as this continues, the consumers are faced with reduced disposable income. Therefore, we will start prioritizing what goods, the household does purchase, and others we will then reclassify as luxury goods, or, to say, oh, I can live without this for an additional month. That's why I'm saying we are expecting, reduced demand of certain products, and we are expecting to see at least a stable demand for what we want to, obviously, your basic goods. Now, that's from, again, the consumer-facing side. As businesses, we're also acutely aware, as this situation persists, we're also faced with rising labor costs. Whether it's every year or every 2 years, we sit down and negotiate a cost of living adjustment with our employees. Now, as the prices of, food continue to go up, that means the cost of living will also have to be adjusted accordingly. So the problem is really being caught between a rock and a hard place. You've got reduced consumer demand on one side, but also increased cost of production, as well as increasing labor costs that are squeezing the margins on both sides. That's why it is important, again, to try and see from, a micro perspective how we're able to manage. But the truth is, like I said it before, we are expecting a lot of pressure to particularly come through the SME sector as opposed to, some of the larger businesses.
Fair enough. We'll leave it here. In the interest of time, Musa, thank you very much for talking to us. That was Musa Masego, Business Eswatini's head of trade, talking to us about the pressures on businesses, or rather being suffered by businesses as imposed by higher inflation and the conflict in the Middle East. After the break, we speak to in-house economist Sanele Sibia.
Those that are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit.
I declare that a turnaround is coming my way.
Turnaround is coming in my life.
The Platform, your front row to elite perspective. A show featuring real conversations that lead to real growth and impact. About 4 young professionals sit at the table with a champion. An industry leader who's walked the path and is ready to share the blueprint. From bold questions to breakthrough moments, The Platform creates a space for mentorship and practical guidance to help you move your career forward.
If you cannot look after the resources that come your way, you will stay perennially poor. And money usually takes the character of the hand on which it's at. If it's a reckless hand, it lacks custodianship and stewardship. Money will always disappear. I don't care how successful you are.
Something has got to shift and change from the space of the leader. Whether you're sitting as a manager in a corporate or you're sitting as an official in a government space, these young people are counting on you to help them create an environment that is conducive for their dreams, their goals, and their aspirations.
Mikey?
Welcome back. Now for our market analysis, in-house economist Analyst Sibia joins us virtually. Mr. Sibia, good afternoon. Thank you very much for your time. So first drone attacks in the Gulf and Brent crude already trading above 110 US dollars per barrel. These current oil prices, would you say they are triggering an economic slowdown, or it's kind of a bit early to look into that?
Thank you, Notsile. Good afternoon to you, and also good afternoon to the viewer. So yes, the worries are if these tensions in the Middle East continue, and we continue seeing prices of oil, hovering at these levels, we are actually going to be moving into somewhat of a recessionary situation. But now that depends entirely on the trajectory of the whole war and when we get to see an ending of hostilities within the Middle East there, and actually the opening of the Strait of Hormuz. Now that is one of the most critical points that we are looking at, and that actually just remains closed, as it were. And that's why we're seeing markets taking a tumble there. Starting with the US, you can see the Dow Jones Industrial Average has actually lost 537 points in today's trade. And when you look into the Nasdaq Composite Index, it has also lost 510 points in today's trades. And the S&P 500 has actually lost 92 points in today's trade. So what we're seeing is the S&P 500 remaining relatively at a very positive note. They're still above the 7,000 mark, but we're hopeful that if we got this peace deal signed, we're going to see the Dow Jones Industrial Average crossing into that 50,000 territory if we're looking at the earnings that were coming out of the likes of NVIDIA, for example. So it was a good earnings week, but overall the geopolitical tensions have come back into markets, and they are putting downward pressure on the markets there. And then coming into London, the FTSE 100 is up 15 points, the DAX up 44 points, and the CAC 40 down 68.99 points. So in as much as we may be pointing in terms of the direction, not that in today's trade, we're seeing an upward tick in London and a downward tick in France. But overall, what we are seeing is a flatlining and overall losses in the markets, because if you look at Germany, they are below the 24,000 mark. London is actually below the 10,300 mark that it was at last week, Friday. So it just shows that the price of oil and the geopolitical tensions are really weighing heavily on markets, regardless of the fact that we are seeing, an upward revision in terms of the GDP trajectory for the UK. But overall, indices are failing to go back to those all-time high levels. So overall, the effect of the war, if you look at it over the 8-month trend, over the 8-week trend in which we've had this war, it's an overall loss type. It's an overall loss market compared to any gains. And then France there is heavily feeling the impacts of this, because remember, French vehicles are largely diesel driven. So now with the price of Brent crude oil above the $110,000 mark per barrel, now that really just shows it trickles into the European economies quite significantly. So we're seeing the same thing in Asia. The Nikkei is down 593 points, the Hang Seng is down 287 points, and the Shanghai Composite Index is down 3.86 points. Now, overall, it's the fact that we expected that with the meeting between President Xi and President Trump, we're going to get a bit of a resolution to the war. But, news coming out of Tehran are signaling that there hasn't been any positive impact, being made by China in terms of, getting Tehran to come to the fold and at least open the Strait of Hormuz. So we're still seeing, that Tehran is still on a very far end where they're saying they're going to continue enriching uranium for civilian purposes. And that's one of the major sticking points which the US says, before we can talk anything, forget about nuclear. And then we have Iran saying, forget about us, forgetting about nuclear. So it's just one of that, it's a standstill. And then coming into South Africa, we're seeing some losses of 500 points in today's trade. Just signaling the fact that the volatility, the geopolitical tensions remains very much, a factor in markets in South Africa. In Eswatini, things remain stable. And then coming into the commodities, gold is down 19.1 points in today's trade, largely signaling the fact that we're already seeing mortgage rates in the UK going up. So it does show that, we are moving into a high interest rate environment as long as we are seeing these levels of Brent crude there. And then, Brent crude stays at $110.59 points in today's trade, given that stalemate that we are seeing between the US and Iran, over those talks, just yielding no results at all. And then in terms of currencies, the Langeni is relatively stronger, but on a very weak note against the dollar, trading at 16.69 points in today's trade, coming down slightly from that 16.70 mark. And then also against the euro, we are trading at 19.41, just slightly down from a higher range there, or just strengthening a bit against the Japanese yen there. So now one Lilangeni gets to 9.53 Japanese yens, but overall it's a weaker position than we were at before the start of the war. Thank you, Notsile.
Thank you very much, Mrs. Bias. Analyst Bia talking to us about the markets, or rather today's trade. Otherwise, this has been the Monday edition of Market View. From myself and the team, thank you for staying with us. In French, au revoir.